Hey folks, and welcome to the Pipnotic Symposium for the 30th of January 2020. Today we're going to be looking at the notion of buy sides and sell sides and buy zones and sell zones. So when I have a price structure like this, I'll typically mark off a major low and I'll mark off a major high. Okay, so we have a major low here. So this is the lowest push in this price structure. I'll look at the deepest pullback, which is here, and I'll mark off to the low. So this is my monthly area of supply, and here at the top we have a monthly area of demand, and supply we have up here. And this candle here was the one that moved away from this area of distribution, so I'll mark it off like that. Okay, so we have supply here, demand down here. Okay, and between these two we have price moving around. Okay, and so what I'd like to do is, between these two areas we have price moving away from this area of demand, moving up to here, forming area of supply, and then moving further down. What I like to do here is then I'll mark off the middle like so, and that tells me that I'm only allowed to buy on the left side of the chart, demand located on the left side of the chart, so in this upward push, and I'm only allowed to sell on this side of the chart at supply. And knowing that, I can start to mark off sell supply. So we have this here. This is nice area of supply. Price has not been back there just yet, and looking on here, we can't really see anything just here. Okay, there's something here, a little bit messy, maybe not something in here, but on this time frame it's not clear, so I won't touch it. Maybe on the small time frames, but here, knowing this, we can see very clearly that we have supply up here. We also have supply here, which is clear. We had a really nice push away. This candle closed below this area of distribution. I mark off the high to the high of the area like that. Okay, price almost got there, not quite, and now it's starting to wriggle lower. Okay, and then I'll do the same thing here, but as I mentioned, there's no clarity here, but what I'll do just to make it really clear is I'm going to draw these sell zones and buy zones, so the sell side and the buy zone side. So I'll go like that. So red for selling, color green to mark off the buy, mark from the low to up here. So this gives me a pretty good idea, visual idea of what I should be doing. When I look at it like this, and I can see green buying, red selling. Okay, so I can only sell here and I can only buy here. And the cool thing about this is that it brings my attention to the extremes. Okay, and so I'm looking to sell at an area where price is retracing this push higher, and I'm looking to buy at an area where price is retracing this push higher. Okay, good. So then I'll go to the smaller time frame and I'll do the same thing over. Okay, and so we have, first of all, I'll be looking something down here, and if you look here, you can see that we have a very small area of demand here. Let's mark off that whole area. That's what we have there. It's a really nice cutaway, and that's pretty much it. There's no demand in here. This is where we have the nice clear cuts away. A little bit here, but I'd wait for price to come back here, and that's pretty much the extent of it. There's nothing else there. Okay, and in here then I'm able to refine my entries. Here you can see this candle poked back into the area before it returned. Above price we have this one as well here. Nice area, nice pattern. When price left here, we managed to cause market structure to fail. The origin of the market structure failure is this area of supply. Then we're pretty much, I think, all lined up pretty nicely. And also here we had a low, high, high, low, high, high, so we can also have market structure here. The area that kind of broke that was up here. Come on, go away. Was up here, somewhere like so. Okay, so this is what we have just there, right? So it's pretty clear to me now. I know that I want to be selling at supply here, and I want to be buying once price moves further down here, and I have my area of demand here, which is in the weekly chart, and I have the one that's further down just here. And this is interesting because this is an extreme low in price, and on the weekly chart you can even refine this so that it's even clearer, and you can see we had price come down, we popped up, we came down, retracement, and this is where the slingshot was pulled back to here before it left. So we actually have a deeper area. It looks something like this, okay, because this is where price came to. So this would be an interesting area to look for a buying opportunity should price return to that. Okay, and the whole thing is based on identifying these buy sides and the sell sides. And then we also have like a buy zone and a sell zone. And the beauty of this is it forces us to be patient. We have a low, a high, price retraced this far, and then it went back. And so for this current structure, this is the buy zone. Okay, so this is the cheapest price, sort of the most expensive price I want to pay for a buy position here. Looking from this one here to down here, we can do the exact same thing. So we'll mark off the sides. We're buying from here to here, and we're selling from here to here. Okay, so I'm looking to sell at supply. We have some supply here. We have some supply here. So this forces me to wait. This really forces me to wait. As you can see here, we have the high and the low. So where's the deepest retracement since this high was formed? Well, I can see it here. This is the deepest retracement. Okay, price left, we came down, we pulled back and we left. Price came back and we came up here. And you can see that this one here we also have the beginning of the sell zone, which is here. And this was a sell zone that was formed just below this area of supply. Okay, so when you have an area of supply formed, price leaves, the deepest retracement before it leaves, this is where the sell zone is formed. But below this one, we had a new area of supply that was formed. Okay, price came down, then it came back up, and then it came back here. Okay, and notice that this one overlaps nicely with this one just here. Price came down, we left, but the deepest retracement since the formation of this area of supply are these wicks here, because this is essentially price going down, moving up, and then leaving. So this is why I always talk about the slingshot. Okay, so you have price coming up like that, price comes out, the slingshot is formed, and then price leaves. Or if you're moving lower, price comes down, the slingshot's pull back, and then we leave. Okay, and so here we have the same thing that's going on here, and then this slingshot is what we can see going on down here. Okay, so it just enables us to find these really high probability areas of supply and demand. And the reason these are important to us is because, I mean, last time price was back at this area here, look how it reacted. So we're just looking to capitalize on the pullback into that area in expectation it's going to continue moving lower. Okay, and we have another one here, which is the high of this area of supply. So should this area of supply be taken out, well, then we have a new sell zone. Okay, a better area, a better price that we can look to sell at, which starts here and moves up to this area of supply. So this is the beginning of the sell zone, and the sell zone ends essentially, it doesn't end, it just keeps going higher. So the higher price goes, the better the price that you'll be looking to sell at. Okay, so we have this down here. And so now we've done it on the monthly chart, we've done it on the weekly chart, and you can even go down to the smaller time frames as well. But ideally you want to be trading in sync with these major time frames, because this is where the major flows are going to be operating. So if you go down to the daily chart, you want to kind of do the same thing. And notice here that we have we have a low, we have a high, so you can do the same thing over. So sell zone, so far we have this. We don't know what's going to happen. We change the color. Green, we have from here and higher, like that. So you want to be buying at demand. So we have something here, we have something here as an example. Okay, so now we know that we don't want to be buying at areas of demand that are formed here. So should price do something like this, come down and then go up like that, you don't want to be buying these, because this is not demand, this is a reaction to demand, which is going to be located on the buy side of the market. Okay, so this is super important, and the cool thing about this is that it's going to keep you on the right side of the market. You'll be buying where price is more likely to bounce, and you'll be selling on the side of the market where price is more likely to bounce. Okay, so this just really puts the probabilities in your favor a little bit more. Okay, so that's what we have there. Let me clear all this off, and we'll find another example. Let's have a look at this. Okay, so what do we have here? So we have, this is all the price that I have from my broker. So the problem with MT4 brokers is they have limitations on the data that you can see, which is always a blow. So I'm pretty limited. My perspective is pretty limited. That said, I do have, I am going back to 2002, but it would be really nice to be able to see what was going on if price came down and formed this high, because that would certainly affect the whole picture. Okay, but what we can see here is that we can see that we have buy zone from here to here, and we have a sell zone from here to here. Okay, so that tells us that we're not going to be buying at demand down here. We're going to be buying lower, because price bouncing here is price bouncing at demand, which is located in this little price structure here. Okay, because this is the origin of the move, this is the high, and this is the push that goes out. This is the high. Okay, this is the leg that this whole price structure here is standing on. Okay, so price reacting here, and these lows here is reacting at demand in here. Price bouncing here is reacting at this here. Price going a little bit deeper is reacting at demand in here. Okay, here we have a parent, we have a child, we have a test of the child, so we have something going on here. We'll probably get some clarity on the smaller time frames. Okay, so buying at this little area of demand is not a good idea, because this is not demand, this is a reaction to it. Okay, so this is telling us that here we have a child and here we have a parent. So these are all children here. Until this side of the market starts to form some serious clear areas of demand that are in line with this side of the market, well then things are pretty one-sided. Okay, but here you can see we have ample opportunity to sell. We have the sell side, so you want to find areas of supply on this side of the box. Okay, so we have the whole box here, buy side, sell side. You want to be looking to sell in the red side here, and we have a couple of areas here that look pretty interesting. We do have, price. Essentially, again, we want to focus on where price has been back to. We've had a bunch of pullbacks here. Price since this price here, price managed to pull back here. Okay, and since this one here, price managed to pull back here. Since this one here, price managed to pull back here. So we have 3 sell zones here. Okay, we have this one here. It's been tested. So price will probably have a higher likelihood of moving back to here, because we have levels testing levels in here. So this is just liquidity that's being removed as price kind of works its way through and is tested on following approaches to this area here. And so you see how price came down, we came up, and we came down. We have not been able to return to this area here since this test of the area. Okay, and so this is telling us that we have a keen interest on maybe selling when price comes back up to these areas here. We also have like interest rate swaps, which are negative, which means that we should be selling, or we can be selling if we want to hold positions for longer periods of time. Okay, so if you look here, we have something here. This is the monthly area, so this is probably something substantial in here. And if you look here, we have a lot of areas, testing areas. We have this one here, price, we came down, we went up, we came down, we went up. So there's probably something in here. And up here we have this one here, and of course we have something up here. Okay, so we have a few areas that we could watch now. There's nothing in here because this has been tested by this one, and so all of these seem to have been kind of washed out. This one has been tested, this one was tested by this one was tested by that one, this one tested by this one, and so there's nothing to do in here until price moves higher. Okay, but also notice that we have higher lows and higher highs. So we have something like this. Okay, so this is what we can see right here. Okay, so this is the macro trend. So we are actually buying on this side of the market, which we can do because all we have to do, we have a negative bias on the monthly chart, but on the smaller time frames, the bias can be slightly different because we have demand and control and or supply and control. And here you can see that if all of these areas here have been tested, there's a high likelihood that price is going to continue moving higher into about the highs of this pullback here. So we can start to buy on the smaller time frame for shorter term trades as price kind of works its way through these areas of kind of washed out supply here. Okay, so then you simply go to the smaller time frames and do the same thing. Okay, and so we have a high, we have a low, something like that. Sell side color green, goes from here to here. Okay, and then you start to look to sell on this side at supply and buy here. So we had this nice area here which is tested. We have another one down here which is tested, and then there's kind of nothing else is formed for the time being, nothing clear at least down here. Okay, but selling, we have this one here. Change the color. We have this one here. Okay, price went up, we left, we kind of pulled back. This is telling us where the edge of the sell zone is here. So look to sell once price moves above this line here. Okay, and you can see this because, I mean, price, we formed this area of supply, price came back, the slingshot was pulled back, and then it left. Price came close to it, a little bit closer, and then price started to break down. And so price has already been pretty far back to this on these two visits here and on this one here. And so this gives us a pretty clear indication that price is probably going to move high, because each time price goes up, like so, it's clearing liquidity out to the upside. Or new tool. Okay, and so this is just something I think that we can do on all time frames. Okay, we can do it on the big time frames so we know where the major flows are moving, and we can work our ways down to the smaller time frames and trade in sync with what we can see on these bigger time frames. Okay. Good. Well, I hope this was interesting. If you have any questions, please send in a message either in the forum or on the video, and thanks for watching, and have a great weekend when you get there.